So now we've got cog number 2 done. Now we're doing cog number 3. And that is you've closed the deal. It's closed the deal to resale of that particular property. So systems needed, asset management systems. You need to be a good asset manager. You need to be meeting with your property management company weekly basis. If you're doing value adds, sometimes a bi-weekly basis. Sometimes you're visiting the property often. But you just have to have good asset management systems in place. You need to have investor relations systems in place. Key. Have your investors be your salespeople, to bring other investors in. It works. It's the easiest way to raise money is through your current investors. You need value add systems. By the way, going into this next year, it is a value add year. You're going to be buying deals with value adds, increasing the rents. Some people that were buying based on appreciation and rent appreciation, that's not the game. The game over the next year, maybe even 2, is value adds. So increasing the value of the property through doing repairs on the property and increasing the tenant profile is going to bring you to market rent. Don't do any deals this next year, or maybe even 2, depending on where the numbers lie, that project a rent increase. We saw craziness over the last year. 8%, year-over-year rent increases. It's like, how do you project that? Well, that's what they got. It's like, yeah, that's what they got, but going into the future, that's probably not going to happen. Plus, as a conservative investor, you never go that high. If it happens, that's great. You make money, your investors make money, and everybody's happy that you surpassed your goals. But if you project that and it doesn't happen, like, whew, and sometimes these deals are penciling out because of that, those big increases. So the value adds now, they're property repairs, tenant profile changes that bring rents to market only. Write that down, you'll be safe. Those are the people that did so well the last 2 years. Insider Club members, Jimmy Stewart, Maureen Miles, Rob Roswell. They're doing value adds. And they killed it. They're not in trouble. I was talking to Vanessa. Vanessa Alfaro is going to talk about, she's going to give this great presentation on AI tomorrow. Do not miss it. AI is taking over the world. She's going to show you how you can take over AI. But she was like, she was doing deal after deal after deal. She's a very conservative investor. She's very, very smart, right? She's like, Dave, I haven't done a deal in 9 months. I was like, why? Because there's not a lot of good deals out there to do. She says, I'm just waiting. I said, how are the deals that you did, 220, 221, early 222? She said, they were all fine. Bottom right. Those are the people that the last formula I gave you, those are the people that are doing well. So then market analysis systems 2, phase 2, it's knowing when to get out if your plan is to get out. Sometimes it's just to hold for a long period of time. But it's knowing how to get out. Understanding the market. Understanding when jobs begin to stagnate. When time in the market begins to increase. When you start moving out. And harvesting. This is the time we seed. This is the time we plant. All right? We plant, we get into deals, we do value adds, we grow the deals, and then there's a time to harvest. So market analysis, when you have your market analysis systems in, at any given time throughout this country, you're going to be in a market, but not all the markets go up and down congruent with each other. Different markets go up and down different ways because of job growth, okay? And you need to understand when it's time to get out of your market. So know that. So that's market systems number 2. And then disposition systems. Listen, if your plan is to grow wealth through growing appreciation, which we all try to do, okay, if it's not a legacy property, you're going to be selling that property 3 to 5 years down the road. So when do you start your disposition systems, your selling systems? It's day 1. You start putting together the folders with the information that you're going to need to sell this property at top dollar at the very beginning of your ownership of the property. That's a really, really key thing to understand. And if you do it, you will make more on the resale. So you start selling your property, or you start preparing the sale of the property upon the purchase of the property. And you buy a property with different types of exit strategies in mind. And then as the deal goes along, then the exit strategies tend to dwindle, or the one exit strategy is going to make you the most money starts to pop up, to the top, and that's the one that you focus on. So here's the portfolio builder, all right? cog number one moves to the point where you get a deal under contract, and then cog number two moves because you're going from contract to close, and then when you close, cog number three moves. All right? Then 1 and 3 are always moving because you're always sourcing deals, always looking for deals to get under contract. And once you get a property under contract, your asset management systems are always in play. Okay, so you got 1 and 3 moving, moving, moving. And then 2, you want that to move as well. How do you get that to move? Is you keep getting deals coming into the system. But here's the risk. 2 stops. Why does 2 stop after you get a deal into, 1 stops. Why does 1 stop after you get a deal into play? That's because your system 1s aren't going. You're so focused on closing that deal that you don't have your deal sourcing systems in place. So when that deal closes, then you get your head above water and go, whoa, all right, that one's done now. We need another deal. And then it takes you another 3-6 months to get another deal. But when your systems are in place, your first deal goes under contract. Within 3 to 4 months, your second deal is usually under contract. And then your third deal is under contract. And then you get 4 and 5. Then you call in the office saying, what do we do? We got 5 deals under contract. You know, we got to get our systems in place. And I say, stop buying. And they're like, what are you, crazy? We just started doing deals. They just started coming in. It's like, get your infrastructure in place. Stop buying. It's tough love, right? But when you hear the things that you need to actually grow a business that's going to work, I'm sure everybody heard about the guy that lost 3,200 units down in Houston. You guys hear about that one? It was about probably last February. That came in the Wall Street Journal. As a matter of fact, one came in for 3,200, and then another one fell at 3,700 units. 2 big syndicators. But what were they? When you read the articles, you learned that these were people that just started out, got good at buying deals, but never put their infrastructure in place. They got ahead of their infrastructure, and because of that, they rolled over. So always remember, these systems that I just went over, these are the systems that, once in place, that help you build a good-sized portfolio. So eventually, only 3 is going to be moving. What does that mean? That means you're done. You've got so much money coming in, you've got so much wealth accumulated through equity that you're just done. You're happy. You played the game for as long as you wanted to play it. You've got more money than you could possibly spend in your lifetime. You know that your next generation is going to be, just as happy. You're going to be that one person that changed the trajectory of your family for the next couple of generations. And you're done. Yeah, only 3 is moving. So then, 3 stops. Why would 3 stop? 2 reasons why 3 might stop. You're dead. That's right. So 3 might stop because nobody in the family wanted to learn about how to invest in real estate, which would be sad. But as a parent, I think my role as a parent is to expose my kids to as many things as I possibly can. Whatever they gravitate towards, that's where I support them. So I hope that one of my kids loves real estate as much as I do. But if they don't, then I will have an exit strategy ready. So when I stop, it stops and they can cash out. But the other is when 3 stops is you just decide that you're done. No more asset management. You're just going to do the different things in life that you want to do. And then and that's a beautiful thing. Is that a beautiful thing? Raise your hand if you're going to get there. Absolutely.